You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music must mean it's Tuesday. Yup, it's interview time here on the old Options Insider Radio Network. My name is Mark Longo from the aforementioned network, as well as, of course, from theoptionsinsider.com. And I'm pleased to be joined yet again by another fun guest from the world of options and derivatives, and indeed beyond. And today we're bringing back an old friend of the network, even though he hasn't been on in some time. He is Gary Franklin, the Vice President of Retail Options Trading and Strategies over there at Raymond James. Gary, welcome back to the Options Insider Radio program.
Hey, thanks for having me back. It's been a little while, and it actually seems like it's at least 10 years because the last 5 months or so have felt like an eternity. So I'm glad to be back on, and glad that we're all doing okay.
Yeah, it's been a while since you and I chatted, and as you kind of alluded to there, the world pretty much fell apart since the last time you and I talked. So let's start there. Walk us through what it's been like for you over these past few months. How are you holding up? How are the clients holding up throughout all of this madness? Paint a picture for us, Gary, with your words of what the last 6 months or so have been like for you guys over there at Raymond James.
Yeah. For me, taking you guys back to late February, I was actually attending a meeting, SIFMA Options Committee meeting. It was down here in the state. I'm based in Tampa, Florida, but we were down in South Florida. And there was just, it was late February, a little bit of talk. Obviously China had already been in lockdown, and we all knew, but nobody really was seeing it coming here at that time. And then the next week, I was actually in Memphis, Tennessee, visiting friends and family and attending a soccer game that I always go to see their season opener of a team called Memphis 901. And, it's becoming a little tradition that I go and do that. So that was like Saturday, March the 7th. And then March the 9th, I'm still in Memphis. And I turn on CNBC. I was staying at a relative's house, and I was like, "Wow, this is real. This is not, just an event that's going to pass." And I was like, "I really hope I'm wrong," but the futures were crashing, and everybody's starting to talk, and the buzz is growing, and seeing the market down 1,000 points day in and day out, and bouncing all around. I was like, oh my God, I'm not in the office. I need to get back to the office, And one of the kind of the ironic things, basically, a lot of firms, pretty much the whole country, right, shut down. We actually have here at the office, because most of the trading desks, everybody dispersed, but there's a couple of us that are still here in the office, literally like 5 people out of like 5,000, right? But the irony of there's meeting rooms that are no longer used. The last day, every day they put up, what meetings are going to be held in those conference rooms each day. Friday the 13th, March 13th was the last day that those things were updated. that paper is still sitting there. How? Come on.
That's not ominous at all. It's like Raymond James ghost town over there. That's kind of spooky. No, it's funny you mentioned, Raymond James. We actually had plans ourselves to head down to your neck of the woods around that time, a little bit after that in late March, early April there, for the big WrestleMania events. We'll take my little guy down there to Raymond James Stadium for WrestleMania. And, of course, none of that happened. So
no. Yeah.
We've all had our plans go awry over here over the past few months here, Gary. But you mentioned it was tailspin, massive sell-off. We saw, particularly in March there, the market really just hitting its nadir, VIX exploding north of 80. That was a crazy, tumultuous time for the options market, for a lot of traders. Walk our audience through, what were the clients hitting you up about? Were they panicking? Were they diving in more? And in general, kind of paint a picture for us of what that period in particular was like for you guys over there at Raymond James.
For us, and I would assume across my peer group of other firms, we kind of shift into hand-holding mode and kind of walk the client and a lot of times the advisor with the client through, okay, here's where we are. Here's the strategy you've always, deployed, but you've got to adjust it now. You can't just keep doing the same thing you've always done. And one of the things that we've seen here, because we're not really online based, we're more planning. When the market is falling, a lot of times we'll have less trade volume. But with this environment where everything was, one day you're down 1,500 points on the Dow and the next day you're up, 1,500, that choppy environment gave us the opportunity to participate. And we have set several all-time records as far as numbers of trades executed and total volume. But definitely we've had to adjust the strategies that we deploy. I mean, if you're selling covered calls, don't chase it to the downside, right? Because you don't know what's going to happen next. And those people that were patient and didn't chase returns as the market was falling or were more than happy when the market was coming back the other way. And then thinking about covered calls, from our side too, historically you go, okay, go out 3 or 4 months at a time, look 10 to 15% above the market, and that's the, most likely the call that you're going to write. Well, that kind of goes out the window when, vol spikes to 85, and stocks are bouncing around. You kind of say, okay, let's be a little bit patient, but as stocks are rallying and because you're being rewarded with greater premiums, instead of 10 to 15%, you can look 20 to 25%, or some of these. I remember an example of one of the stocks that I was following. It had got cut in half, and it went from like a $40 or $50 stock into the teens. Well, it's time to roll. Well, I'm not going to roll down into like the 20 or 25 range. I can sell the 35s or 40s, maybe shorten my duration a little bit, and I'm actually collecting more premium. So it was a lot of adjusting what you're looking for. And the other piece of it would be, we do a lot of put hedges here. And historically, you could go out 5 or 6 months in time, and maybe it would cost you 2% of what you're trying to protect. But that's when there's an unknown event and the house isn't on fire, but you're wanting to buy that protection in case the house does burn down. So we quickly realized, okay, the house is on fire. But people still want to save the bedroom that hasn't burned down yet. That's going to cost more, but we can't go out 5 or 6 months at a time, and nor do we really need it because the unknown event is a known event, right? So you can still deploy those strategies, but you can be more direct because that the event that you were worried about is in motion.
Interesting. Sounds like a lot of things were unfolding over there. And you're right. I was kind of curious about that, how this event would impact options volume over there, because we have seen from a broad industry perspective, markets and options volume exploding. June was the busiest month in the history of the options business, but every firm is different, and you never know how clients are going to react. It sounds like your clients reacted by stepping up their trading game, not taking their ball and heading for the exits there, Gary.
Right. Yeah, as someone that's, been in this world, the tail end of the 80s, seeing the dot-com days and the Y2K days and on and on and on, you kind of see in the financial crisis, the psychology, especially coming out of, the financial crisis, was that the market was never going up again. But then having this long historic bull run that ended abruptly due to the virus, the psychology wasn't as bad as it was during the financial crisis. People were willing to say, okay, I have money on the sidelines, or I have this, I want to sell puts because I want to buy this stock. I think the courage pretty much was still in place. Everybody's fearful. You only touch the stove once, but they seem to, have a plan, want to discuss it with us, confirm the plan, have an exit strategy, and they were off to the races.
Speaking of off to the races, this market has been off to the races since that nadir there in mid-March. It really hasn't looked back. We're hovering at or around or through, indeed setting new all-time highs. It's like the entirety of the last few months never really happened. We're back up to the pre-sell-off levels. Now, in addition to advising clients, you also manage some money over there at Raymond James. I'm curious, what are your thoughts here as we're teetering at these epic historic levels out there in terms of this valuation, this volatility, and what you're seeing going forward here, Gary?
Yeah, I'm kind of in the camp, and also with working with client, money and giving them advice and all that kind of stuff. It's a little concerning when you see on like CNBC and Bloomberg and all this stuff that the valuations are different this time. That there's room to run in these stocks, and we're just looking at it wrong. That this is different. Whenever someone starts saying this time is different, you gotta take a little step back and go, okay, there's probably some bumpy roads ahead, and for me, you never want to fight the tape. And to me, the tape in this case is the U.S. government is backstopping a lot of the activity that's going on. Yes, there are sectors that are really getting rewarded for this type of environment. The Zooms of the world. One of my neighbors has a side business where he does a lot of collectibles on eBay, and he was telling me as soon as those stimulus checks came out, their eBay business went through the roof. So their consumers have shifted their spending. I think they are saving to some degree because they have uncertainty. Everybody knows somebody that's been furloughed or laid off or whatever. But there's a lot of cash. It reminds me of the late 90s when the Y2K boom was about to go bust, when the government was worried that the ATMs were going to stop working and roll over to 2000 and all the computers stopped working. So they pumped a lot of cash into the market. This kind of reminds me of that.
Yeah, it has some definite airs of the dot-com bubble kind of coming to an end. I've told the analogy before here on the network about how towards the end of the dot-com boom, you would ask someone on the trading floor down at the SIBO, and these are professional traders who should know better, and they'd be extolling XYZ stock to me, and I'd say, well, what is it? What does it do? And they would say, who cares? It's internet, right? I heard that refrain so many times, and it drove me crazy. And now we're starting to hear kind of like what you alluded to earlier there, Gary, that you're right. We have to think differently. This is a different market. It certainly is unprecedented. I'll give them that. I've never really seen anything like this before. But yeah, there are some maybe disturbing warning signs out there, Gary. I'm definitely on board with you on that front.
Yeah, but as my approach is always very methodical and trying to look, 6 months, 9 months, a year down the road, and trying to have that good smoothed out experience, and not trying to overreact to near term events. So that's kind of my focus. But wonder, and we know that the U.S. always figures things out, and obviously we'll have a vaccine sooner, hopefully, rather than later. But once that's done, we still got to rebuild our economy. That as most people know, we're not going out as much, we're not traveling as much, if at all, nor do we really want to. So that ripple effect, once we really get back going, and once the stimulus kind of stops, what's going to be left behind, right? How do we kickstart the economy back to where we were? That's going to be something on the horizon, and I think that people should be focusing on, not losing sleep over it necessarily right now, because once again, we don't fight the tape. But my personal view is that's something next, probably, going into next year, what we might be facing.
Well, you mentioned earlier the popularity of Zoom calls. That's marked a seismic shift for your business. You guys at Raymond James were used to meeting people in person and dealing with a lot of their, sometimes the role of a financial advisor is also a bit of a psychologist as well. Now all of that has shifted remotely, and you're having to do that during, quite frankly, the most unprecedented markets we've all ever really lived through collectively. So what's that been like, dealing with this whole new model while you're having to deal with these unprecedented markets here, Gary?
Yeah, I actually think it's been a positive move in a lot of ways. Nothing beats meeting in person and shaking somebody's hand and saying, look, I'm here for you. If it was my money, this is what I would do. But here at Raymond James, we've really embraced it. And we do a lot of, before this happened, we would bring recruits down to the home office. We would bring high net worth clients down to the home office and show them the different product areas. And without missing a beat, we've gone to the Zoom format, and it's business as usual in a lot of ways. I kind of laugh. I had a recruiting call, a Zoom call, probably about 2 months ago, and we've been dressed casual, which for me just means no tie. Not full suit, but I wore a suit, and they were laughing at me. They're like, why are you wearing a suit? We're right in the middle of a pandemic. And I'm like, I don't know. We know when we do these meetings in person, you wear a suit and tie.
Some habits are hard to kick, Gary.
Right, yeah.
You got to wear that suit somewhere, right? It's not getting its work like it used to.
I know. But yeah, recruiting wise and client, meetings, we're not missing a beat here at Raymond James. We've actually stepped it up, and even clients that you think would not be tech savvy, it's so easy. The technology is right there at your fingertips. To do it. It's amazing.
Well, you touched on adjusting your covered calls earlier and maybe staying away from some pricey protective puts now that we're, like I said earlier, maybe teetering at the precipice, or who knows, maybe we're poised for new all-time highs yet again. No one really knows out there. What are some of the strategies you're exploring? Is it still primarily covered calls, or what are you guys looking at on the option strategy and right now with clients?
For us, for people that want to get in the market or add to positions, we're doing, really talking and educating around covered combinations, where let's say you were going to buy 1,000 shares of stock. Why not buy 500 shares right now, sell 5 calls above the market versus that 500 shares, but then sell 5 puts below the market with the same expiration date to get that double premium. And then if the market were to pull back, because we've had a lot of stocks that have had a good run, or stocks that have been beaten up and we're just trying to, get a price averaging layer into that stock. If the stock were to pull back, you buy the other half with a lower cost basis and less risk on the table than you would have if you just bought that full 1,000 shares today. So that's more of one of our go-to moves right now. Sell call, sell put, buy half that position today, get that double premium. And then for buying protection, like I was saying earlier, historically we would go out like 6 months and say, keep this position halfway through the life of that option. If no event has happened, look to reset it again. But we've kind of adjusted it to, okay, the house has been on fire. Premiums are still a little bit high. Let's shorten it up. And especially going into this time of the year and this cycle of the year where we have the election coming up. So we've got a double whammy that's fast approaching. We've got, the October, which is always a wild card. But then right on the heels of that, we've got the election in November. So, instead of going out to, say, January, we're recommending looking at November puts, right? If you're looking for a portfolio hedge and being nimble, maybe not keeping it all the way to November, because most likely we're going to have some indication on what's going to happen by October. And then as we get closer, maybe then look to reset it if you still need it. But that's kind of what we're doing on the put hedge side, trying to control that cost. Plus, there's two big events right in front of you, October and then the election in early November, right?
I like the covered combo. It's not one you often hear from relatively staid advisory firms. That one tends to spook people, having that bit of downside risk. But it sounds like your clients are on board for that strategy there, Gary.
Yes. Yeah. Now, obviously, some people are only qualified in our mind for the covered call. So if they're only approved for covered calls, we show them that where you buy stock, sell call. But with a little bit more options experience, you can get approval for cash secured puts or puts, selling puts on margin. Takes a little more experience, at least within Raymond James world. But if you're okay with that and you understand the education behind it, which is obviously what my role is, my role and my team, we try to promote. If you're good with that, it's a kind of the best of both worlds in my mind.
Well, we kind of discussed the client's perspective on how, and it sounds like they're trading up a storm over there from an options perspective. But as you just mentioned, your role over there is also a bit of an internal evangelist and educator at Raymond James for options. So what are you seeing over there on that front, particularly over the last few months? Has the firm as a whole, has it started to pivot more towards options? Are they becoming more interested in this product category? And also from the ground up, from the advisors in the Raymond James network, are you also hearing more interest from them as a result of all these crazy things called options, Gary?
Yeah. As you know, Mark, it's a never-ending battle of education. The stigma of options, which is totally off base, that it's risky and all this kind of stuff. And just selling puts, for example, if you want to buy the stock and someone's willing to pay you for the right, for them to make you buy the stock, give you that obligation, how is that more risky than just buying the stock today? It's not, right? So here internally, we're always going to be promoting and educating the right way to do it, the Raymond James way, the way we see that's more conservative. But as far as when the pandemic started, there was a huge spike in option agreement approvals. So the advisors are embracing it. The customers are embracing it. We have asset managers that are on platform. So for the advisors and clients that understand it, but don't want to do it themselves, that area has really grown. But the guys that want to do it themselves, the tools are there for them to do it themselves, and it's really growing. But it's a never-ending story of education, not only internally, what's the right way to do it, but then also getting it out to the clients and through videos or brochures, one-on-one Zoom meetings, you name it, it's 24/7.
Well, that's music to my ears there, Gary, that people are starting to pick up on the options product. Unfortunately, that music there is not music to my ears, so that means we've come to the end of our little sojourn here through the world of all things options at Raymond James. But Gary, if folks are intrigued, they're listening to this, maybe they're out there looking for a financial advisor and maybe they want to learn more about what you guys have to offer, or maybe they're a financial advisor. You have a lot of those lurking out there as well, and then maybe they want to kick the tires over there at Raymond James and try out their options offerings. Where should those folks go? What should they do, sir?
I would recommend going to our website, raymondjames.com. Looking for either an advisor. We actually have option strategy videos on there, so just search option strategies on our main site and let me know if I can help in any other way.
Well, Gary, I'm glad we can get you on. We'll have to do it more frequently. We'll have to, hopefully, the next time we have you on, there won't be a world-impacting calamitous event between now and then. I think we've all had our fill of that for 2020 so far.
Yes, sir. Yeah, we're done with. Let's put 2020 behind us and get back to normal.
Yeah, can we just flip the calendar? Does that work? Can we just make it January of 2020? I think everyone can get behind that. Hey, January in the 80s, that wouldn't be the worst thing either, right?
Yes, sir. Sounds good to me.
I like it. Well, Gary, I'm glad we can get you on. Sounds like interesting things are afoot over there from an options perspective. You heard the man. If you want to learn more, RaymondJames.com is the place to go to kick the tires and light the fires. Hope you like this double dose of interviews we had coming at you here today on Interview Tuesday. Hope you like the rest of the content that's been hitting you guys throughout the week. Volatility views, TWIFO, the option block, the advisor's option. That's coming up again next week and a whole bunch more. I see the numbers. I know you guys are downloading it en masse. I'm glad to see that. We'll see you back here next time for more episodes of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.